Good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer Treasury Consulting. As we speak, Treasury Consulting is a multi asset and multinational hedge fund. By multi asset, I mean to say we actively taking positions in gold, silver, platinum, palladium, base metals, oil, natural gas, agriculture commodities, foreign exchange, and equities. But having said that, by multinational, I mean we actively cover positions in multiple locations like United States, Europe, and Asia Pacific region. Like I repeated many times, and I would continue to repeat many times that we are a proprietary hedge fund. By proprietary, I mean to say no third party. I repeat, no third party can invest capital in our fund. Please do take a note of that. No third party can invest capital in our fund. Today, when I was doing my research on PVR, I got something I hadn't thought of. Let it be honest. I wasn't expecting this when I was doing my research on PVR. First of all, let me make very clear that I do my research on the financial numbers, and these financial numbers are available in public domain. We know that on time to time basis, I raised my concern on the audit quality by the big fours, which includes, which includes on time to time basis, we are making videos on the big fours, which includes EY, KPMG, Deloitte, and PwC. And we all know that there is a competition which is going between EY and Deloitte as far as the compromised audit is concerned. Deloitte is very recently fined by Securities and Exchange Commission regarding their audit practices in China. Einstein and Young recently fined by the same Securities and Exchange Commission about 100 million US dollars, which is around 820 crores approximately, 830 crores approximately, regarding the manipulation in CPA examination. KPMG very recently settled approximately 5 million GBP, which is roughly 6 million US dollars, regarding their audit practice in one of the insurance giants of London. And the names of these big fours continue to come in the public domain. I leave the job on you to check on the Google. I repeat, I leave the job on you to check on the Google who is the auditor of PVR. But I give you guess. You would feel very happy once you get the name of the auditor of the PVR. I myself very clear that when I see the audit report by the big fours, I never trust these audit reports. Because one thing I know that in the last decade, specifically in the last 3 to 4 years, there is hardly any accounting scandals these big fours not done. And I not been able to understand that on what grounds the audit license of these big fours are not cancelled or not revoked. And today, when I was doing the analysis of PVR financial statements, I got something which, technically speaking, is not possible. But in India, everything is possible. This is something I can say. In India, everything is possible. In India, even like Indigo, where reserves are negative, it is possible. SpiceJet, the debt grew multiple times, it is possible. Tata Group, where the cumulative debt is reaching 3 trillion INR. I repeat, 3 trillion INR. It is possible, and various instances it is possible in India. So when I was doing my analysis of the PVR, it is thoroughly possible. It is thoroughly possible. This is something I am aware of. But before I move further, let me first confirm you that as far as the PVR is concerned, PVR is a loss making entity. Example, March 2020, 75 crore loss. June 2020, 226 crore loss. September 2020, 184 crore loss. December 2020, 49 crore loss. March 2021, 289 crore loss. June 2021, 220 crore loss. September 2021, 153 crore loss. December 2021, 10 crore loss. March 2022, 105 crore loss. June 2022, 53 crore profit. September 2022, 71 crore loss. Congratulations, which means 2020 complete, March, June, September, December, all 4 quarters loss. 2021, March, June, September, December, all 4 quarters loss. 2022, December is yet to come, but March, September loss. So every quarter, PVR is trying hard to bring losses on the table. This is the beauty of the game. But I fail to understand, as always, I'm using as always, that why Indian media is not hyping this point. You know the reason why Indian media not hyping this point, but still I'm raising this point. When on quarter basis, I repeat, when on quarter basis you are incurring the losses, it means something. I repeat, it means something. And the investors, those who are investing in PVR, they are, I'm sure that 99% of the investors might not be knowing that they are investing in a company who is reporting losses on quarter and quarter basis. Reason being, they trusted the media, and media always relied on one thing: I will not reveal the information whatever happens. Rest we would be covering in the second part. Before I move further, let me give you the background which is currently going on. Global economy is already in depression, and we cannot say that we are not in depression. We are facing severe depression. The right examples are the top financially stable and profitable companies like Amazon, Facebook, Microsoft, Google, and the list is pretty long, Twitter and all. They all are cutting jobs. And as we speak, Amazon made it very clear in public that the job cuts might continue in 2023 as well. It means Amazon is making the mindset: please do not expect that we are done with the job cuts. God forbid, if Google would replicate this, then I am not sure what would happen. In this eventuality, when the depression hits, the foremost thing that is hitting is the hospitality sector, which includes multiplexes, cinema halls, restaurants, food items, luxury items, I would say resorts and all these things. Because when the depression happens, the job cut started. And when the job cut started, it means the people try to save as maximum as possible. So, common sense, people prefer not to spare money on the things which do not make any sense or which can be postponed, considering the depression is right on our head. And it's not about India, worldwide. You will say worldwide, this is happening. People are trying to save the maximum amount of money. As we speak, or as we are shooting this video, there is hardly any startup left in India who not cutting the job. Hardly any startup. And if you are thinking that Indian startups are done with their job cuts, then kindly wait for few more months and you have more information on the Google. Considering this as a backdrop, it would be very difficult to assume that the stocks like PVR, and as we speak, PVR is trading near about 1780 levels approximately, would continue to be bullish in nature. Yes, like I said in my earlier videos, in India, anything can possible. In India, anything can possible. And the latest example is the Paytm. Paytm is being hyped by our beloved media, which push millions of investors worldwide to invest their money in Paytm at 2150. And as we speak, Paytm is closer to 530, which means approximately 75% of the market capitalization of Paytm is already eroded. Now, the same media who hyped Paytm, who hyped that Paytm would be next Microsoft, is not taking any responsibility. Rather, there is hardly any business channel who dare to cover what the hell is going in Paytm. If I look at the statistics of PVR, you know that I am a person of statistics. If I look at the statistics of PVR, then PVR debt as of March 2011, which means financial year 11, was 162 crores, which means 162 crores as of March 2011, which is reasonable. You can say it is a reasonable. It's not, you can't say that it is not reasonable. But September 2022, which means approximately 11 years, the debt is 5,300 approximately. So from 162 to 5,300 in the last 11 years, the debt of PVR grew by 32.66 times. Congratulations. So I would like to congratulate PVR top management that your debt grew by 32.66 times in the last 11 years. But the beauty is, I'm sure 90% Indian investors completely unaware what I am talking. Now comes to the finance cost, because suppose you have a debt in your books, it means you are holding a finance cost. Common sense. It's a very very common sense. In March 11, the outgo, which is also known as finance cost in our parlance, the outgo was 16 crores as per public figures. I repeat, as per public figures. In 11 years, which means March 2022, 11 years, it is 498 crores. It means from 16 crores to 498 crores. It means the outgo grew by 31.12 times. Almost the same we are having debt. It means in the last 11 years, the debt grew by 32.66 times, while in the last 11 years, the finance cost, which is the outgo, the money which is going outside the system, grew by 31.12 times. But did you ever got to know such glaring statistics that in the last 11 year, rather than having a substantial reduction in the debt, rather than having reaching at a point when the company should be debt free, the debt accumulated by more than 32 times. And this is the reason, this is one of the reasons why on quarter basis, I repeat, quarter on quarter basis, Paytm is registering, sorry, PVR is registering the losses. I once again repeat, please visit the annual report of the PVR, which is widely available in the public domain. It is not a confidential information. Being a listed company, their report is available. Please check the big four who is auditing the PVR and then do the Googling yourself. Because one thing is very clear, that as far as the principle of going concern is concerned, which clearly saying that company can be going concern provided it is having profitability and also we see some future in the business. But if you are incurring losses after losses on quarter basis, one quarter okay, two-quarter okay, three-quarter okay, but what would if on quarter basis you are incurring the losses? And the beauty is the debt as well as the finance cost grew approximately 32 times in the last 11 years, then technically speaking, can this company be termed as a going concern company? That's the most important point. Probably I would be needing Steve Jobs, Newton, Einstein, Edison, Galileo, the help of everyone cumulatively to make me understand that PVR is a going concern entity. Because technically speaking, such glaring statistics is pointing me towards a different direction. Rest we would be covering in part 3. In this part, I would be specifically talking about something which is called investments. Now, what is investments? First of all, investments means suppose you are having profit of 100 rupees and out of this profit you declare dividend of 10 rupees, assuming. When I say profit, I mean PAT, profit after tax. When you're declaring a profit of 10 rupees, you're left with 90 rupees. This 90 rupees would be transferred to reserves and surplus. Now, this reserves and surplus won't be lying idle. Rather, companies would be investing this reserves and surplus in the respective instruments. Some invest in mutual funds, some invest in term deposits, some take certificate of deposit, commercial paper, some even invest in some exotic structured products. So it's all varies from company to company. I understand that. But one thing that really surprises is that if you look at the PVR annual report effective March 2021 till March 2022, which means 11 years period, precisely speaking, you would get to know that the investments were 1 crore in March 2021. Only 1 crore. And in March 2022, investments are zero. And if I tell you the figures of the last 11 years, 1, 1, 38, 24, 2, 2, 2, 21, 11, 2, 1, 0. Now, what does that mean, guys? What does that mean? It clearly signifies that the investments of the organization is absolutely zero. Absolutely zero. And to prove my point, I went to the thing called cash from investing activities. Cash from investing activities, and you would be highly surprised. You would be highly surprised to know that the interest received component is almost zero till March 2021. Interest received component is almost zero till March 2021. And you would be surprised to know that the company is taking lot of borrowings. Interest paid as a finance is growing. Financial liabilities are growing. And if I go the overall statistics is the return on capital employed is minus 3%. Return on equity is minus 31%. And one thing which I never understood is that the stock touched the high of 2215. Almost, you can say, and that is not 10 years ago. It is in August 2022. Stock touched the high of 2215, almost, you can say. And as we speak, the stock has fallen around 1730 levels. Nonetheless, one thing which is very clear to me, and one thing which would continue to be clear to me, is that the most important thing which you see when you invest in a stock is the profitability. As simple as that. To me, profitability is the most important thing I am always keeping into consideration. Because if I go with the statistics, return on asset minus 7% approximately. Return on equity minus 31% approximately. Debt to equity ratio 3.9, which is very high. The company is losing on year-on-year basis. Return on equity minus 31%, and more important thing which is known as the promoters holding. Promoters are holding 17% in this company. Foreign institutional investors are holding 36% in this company. Domestic institutional investors are holding approximately 27% in this company. And you would be very surprised to know when I say about foreign institutional investors, then the largest foreign institutional investors, as far as the public information is concerned, who invested heavily, according to the information which is collated, it includes your Matthew Pacific Tiger, it includes BlackRock, it includes BofA Securities, it includes Kuwait Investment Authority, and there are many others. But one thing to me is very clear is that the company is not in profit, company is losing, company debt is growing, company finance cost is growing, the basic indicators of the stock is in loss, Henceforth, considering the background also which we are having in the global economy, I dare to think before investing in this organization. I know that we have one big four who is the audited partner of this organization. If this big four feel offended, I repeat, if this big four feel offended because of this video, then I have already challenged them many times, and I again challenge them. In case they feel offended, they can give me a call. My number is +91 98 99 242 978. Let me repeat, +91 98 99 242 978. Alternatively, you can visit our fixed income platform www.fixedincome.global. Let me repeat, www.fixedincome.global. To conclude, I am a person of statistics. I am a person who believe that the fundamental of the balance sheet, the fundamental of the the intrinsic value plays an important role. The world faced many scandals, SoftBank, FTX, many. In the latest FTX, millions of investors lost billions of dollars. Why did they lost? They trusted the media because they do not know how to study the balance sheet. Anyways, this is Rahul Magan here from Treasury Consulting Group.